Hi, I'm Peter Rose, founder of Longwood Currency Trading. When you're starting out, start slow and then get fast. And I'm going to explain that in today's video, but I thought I'd come out here. I was out here the other day showing the leaves were falling, and now we've got our first snow, and not very big, a couple inches. It could have been more. We're in early November of 2023 here in New England, US, and so it's about time for it to start snowing. So we didn't really get that hard, cold freeze that would let the snow mount up. So it's a slow start to the season. And up here in New England, we're going to get it fast pretty soon. But for now, because it is cold out, let's go inside and get a fire going and then talk. Can't do anything without a little coffee. Okay. So if you stuck with it this far, nothing's made any sense as far as starting out slowly when you're in trading and then increasing your speed. But that's okay. Part of the education that I'm trying to convey is it isn't all about trading. It's about looking at the nature around you and discovering what works in the greater scope of things than you, and then trying to adapt that process to your trading. By getting started in trading, if you're trading less than a couple of full lots, less than about a year of live trading, you're just getting started on your journey. That doesn't mean you can't make $100,000 a year, but from a percentage or probability standpoint, if you're in that starting period and you haven't had a proper education and you're struggling with all the information that's out there, you're really not having the success that you need to have. I think that under good training, you probably would be able to be well, you'd have the knowledge and the skills to be a consistent trader and making money consistently. There's two factors in being consistently making money, but video isn't about that. But it is taking a month or 2 months under the proper guidance to form a good solid foundation for what you're going to try to do, and then expand on that by actually trading and finding your voice. It's like a writer. If you've ever tried to write something, the community calls it finding your voice. You have to find out what feels comfortable for you in the way that you express your words, so that other people go, oh man, I felt that. And in trading, the result of, oh man, I felt that, is ka-ching, that you ring the cash register. And you do that on a consistent basis, which means that you have built your trading in a correct manner. Part of that is slowing your ass down and taking a little bit of time in the beginning to learn two things. Number one is the mechanics and the plumbing. Well, first of all, you learn the plumbing. That's, you know, what a pip is and all that other kind of crap. You may think that you know everything, but you've simply got a bunch of information, but you need to learn the correct plumbing. Trim that down to the stuff that is really important. You should be able to read through stuff. If you can't and you don't know how, well, you need a mentor. You need somebody to say, forget about this stuff and focus on that. That's the plumbing. And then you learn the mechanics of trading. How do you put an order in? What's the difference between a chop, a range, and a trend? How do you trade those things? Do moving average crossover systems work? What's an engulfing candle pattern? Does that have any significance? It doesn't as a pattern, but it does in telling you what the order flow is doing at any given time. And then you begin to see what the market itself is that it's order flow. And this is the currency market, not the fucking stock market or futures or anything like that. It's different, and there are reasons, and I teach those reasons. If you watch my videos, you know what those reasons are, why the currency market is the way that it is, and why we need to look at it in a non-intuitive manner. Stocks, you can look at it intuitively. You can look at futures and commodities intuitively, but you can't do that in the currency market for the reasons that I've talked about before and the reasons that I share in my courses and consulting work with students that are actually serious about learning this stuff instead of just looking for some magic pill. In starting out, after you learn the plumbing and the mechanics, and you're actually trading, don't trade dollars, trade pips. And don't trade to make dollars or make money or make pips. Trade to get consistently some positive value in your trading. And how many trades is that going to take in order for you to determine that? Well, you know, if you're got to burr up your ass, maybe 50 trades. Better would be 100 as a sample size. We call that a sample size. The larger your sample size of trades, the more confident you can have that the results that you're seeing are consistent and you do know what you're doing. If you just trade 10 times and you make $40,000, you think you're a hero. And the next trade you take, you'll lose 50. That's just the way it works. That's the power of the currency market. You can make a lot of money really fast, but if you don't know what you're doing, you're going to lose that and more when you get schooled. It isn't that you're taking time backtesting and studying strategies and all this stuff. I don't teach any of that stuff. I teach a specific way to slow start. Basically, that's simply, again, not trading for dollars, but trading for pips, and not trading to make money, just trading to see what works to be consistent. You know, you don't learn anything when you win anyway. You only learn when you lose, because you go, oh shit, I lost. And you don't really learn a lot until you lose a lot. It's symmetrical. When you take a bad hit, you have to step back from that and say, wow, I don't want that to happen again. The problem when you're trading mini lots or a couple of fulls is that big hit, let's say you're trading 2 fulls at 20 bucks a pip, and you lose, I don't know, say 100 pips. I mean, that's a lot of money. That's 2,000 bucks, right? I think you would come up tight, your ass would be tight, right? And you have to say, man, I really did something wrong. Well, what did you do? When you're starting out, it's difficult really to determine that. You can speculate and say, oh, I just let the bad trade go against me. But there's a lot more to it than that. And you really need somebody external to you to be a coach and say, yeah, what you're thinking is correct, but you're not thinking of it in the correct way so that you can learn something. It doesn't make any difference for you to lose something, go, oh, I just held the loser too long, because you're going to repeat that. It's tough enough not to repeat it when you know what you're doing, but when you really don't understand things and you really don't know what you're doing and you don't have a recovery plan, it's devastating. And that's why so many folks fail. And there's no reason to fail in currencies. It's fine to lose your money. When you get experience, the thing that you want to look out for is don't lose more money than you've put in. Or you pick a certain time frame, like maybe a year. And so you oscillate back and forth. Let's say you start with $10,000 account. And at the end of the year, you've got $15,000. You made 50% on your money. Good, that was a good year. Now when you start over, you've got to be very, very careful, because you don't want to lose any of that $15,000, because that's part of your stake. When you're trading larger, sometimes you will run into a situation where you've made money over the course of a year, and then you're in the next year, and all of a sudden you'll take a run and it won't work out, and you'll go negative into the past year's profits. Well, when you're starting out the new year, that's going to be difficult for you not to go negative. It's just how much you go negative. And that's where some of the metrics that you learn as you're learning to trade come into play. It relaxes you about the thing. Oh shit, I just lost X amount of dollars. Oh, well, I've got an average return against risk of 0.4% or 0.5%. And so I've lost X amount of dollars, so 0.5% of that is how many times? How many trading days do I need to go in order to make up that loss? What becomes difficult to stomach is when you lose so much that you realize that you're not going to be able to come back from that. You know, if you have a $10,000 account and you lose $5,000 of it, 50%, it's going to take you 100% return on your remaining $5,000 just to get back to even, 100%. And you lost 50%. How do you think you're going to make that back? Well, you're not. So if you make the mistake that I did when I first opened my real live trading account, I mean, I had a couple of mini live positions and I blew out of those, but I was able to go to the bank, write a check, and refund those accounts. But when I opened my large account, it was $45,000, and I lost that because I was listening to all this education and information that's out there, and I thought they were giving me the straight scoop. They're not. They don't know what they're doing, or they don't know how to teach. I was in real estate for 40 years. And when I would go to somebody, when I was getting started, and I'd go to somebody and I'd say, hey, how do you do this? They'd say, do that. And I did that, and it worked. They had no reason to fade me. And they knew what they were doing, and they could offer that advice. I'm sorry to say, but that's not the case in the currency market because there's so many idiots out there driving around in fancy cars that are rented, and they got lucky. They're trading at 200 or 500 to 1, and you make 6 lucky bets and your 6-figure account. Oh, well, now you can buy your McLaren and you're all set. No. When you are beginning your journey, you need to be very, very rigorous about the foundation of what you're doing, that you're building. Because everything that you do after that will make a difference if that foundation is strong. When I lost all that money, as I've said many times in my videos, I lost $40,000. I had $5,000 left. I'm not going to make, I mean, that's not going to happen. I knew I was going to have to go to the bank and put more money in. But before, I wanted to see, well, what would happen if I traded this the next $5,000? What were my mistakes? What did I do wrong? And I stepped back from it, and I have the education, and I have the work skills. I was a software engineer for 33 years, solving pretty complex problems. I've been 55 years now, 58, 6, I don't know what it is, years in martial arts, which deals with solving the complexities of learning and what the Buddhist would call right thinking, right living. So I had the background to look objectively at problems and have solutions for them. So I stepped back from the currency market and I looked at what I had done and I looked at the market itself. I go, that didn't make any sense. Why did I do that? It was the education that I was assuming was correct. This is not like real estate people giving you help. It's idiots giving you help. So I looked at the thing, and in 15 minutes, I had it figured out. Why? Because I had the background to do that. And that's what I teach when I work with somebody. Not that you're going to be able to make $40,000 on a $10,000 account after getting the secret sauce rules, because it takes experience in working with those rules to develop metrics. You see, it's the key to your success in trading are the metrics that you produce, because those metrics tell you not only how good you're doing, but also where you're having problems and failing. You look at that particular metric and you say, okay, now I know how to fix that. That's 80% of my consulting that I would do with somebody. I mean, I don't charge people just to send me an email and say, hey, I'm blah, 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 and I have a specific problem. What am I doing wrong? I can look at that objectively and say, well, have you tried this? Now, if you need to get in and you really don't understand trading and you just solve that one problem and you think that's going to help you all across the board, you better look at your full spectrum of education and go back and take some time to do that. So in the beginning of your trading journey, you need to focus on valid education. And it doesn't take long. I mean, God, folks I work with, I can get them through that stage in a couple of 3 weeks. It's just reading. I mean, if you don't like to read, or like some people don't like to watch my videos because, oh, that guy just talks, he doesn't show any charts. That's the fucking problem. You're looking at people showing charts and you're trying to match what they're doing and what you're doing. But you're not ready for that because you don't have the same background that they do, regardless of what they're trying to show you. When I work with somebody, I never show them a chart. I show them a hand-drawn line because I'm teaching principles and I'm teaching process. And that, if you're bright enough and you have the ability to visualize, you can see how that all goes together as a process. So you don't have to learn a bunch of stuff. I'll tell you a story. When I was in college, I started out as a chemistry major. Went through the first year. I loved chemistry. Took chemistry in high school, and I got into my second year of chemistry, and I was taking organic chemistry. Anybody who's taken organic chemistry know that it's a bitch on wheels, and it takes a lot of memorization of patterns and stuff. And I couldn't do it because I have short-term attention span, memory problems, and all that crap. I got a HD component to me, I guess, and I just couldn't do it. And I was taking baby physics at the time, and I went to and I loved it. And I went to the physics chairman of the physics department, and I said, look, I'm having a miserable time in chemistry. I can't remember all this stuff. He goes, don't worry about it. There's 6 major equations in physics. They're complicated, and the solutions are complicated, but there's only 6 equations that are the foundation of everything that you're going to learn in undergraduate physics. There's another 4 or 5 once you get into graduate level physics, but to get through, you only need 4 to 6 of these equations because we derive the solutions. We don't look at this individual data and memorize this equation and memorize this equation and memorize this and try to plug the data into there. We look at the system and write the equations that are appropriate for that system, whether it's an electromagnetic system, thermodynamic system, a Newtonian mechanics problem, or a quantum mechanics problem. What's the problem and what are the equations that resolve the issues that are consistent within that problem domain? And it's the same thing with and so I went into physics and got my physics degree because of that. Don't worry about it. And so I've approached trading in the same way. Don't try to learn all this stuff because you can't. It's like competing in fundamental analysis with these larger bank institutions. How are you going to do that? You're going to read the Wall Street Journal and watch videos on web about what people think the economy is going to do, and you think you're going to get an edge up on that? It's impossible. And I've done videos. If you want to do fundamentals, just look at interest rate decisions on the country basis, because that's the dog in the economy that's going to go on. And if you lack interest rate differential changes going on, most of the time they don't change them, but every year or so. But in the United States, over the last 20 months or so, we've had 14 increases. Now we're flatlined over the last 3 reports in no more raises. But when that goes away, now what do you look at when you're not changing the interest rates? You're looking at the things that would change the interest rates that have to manifest itself and change all the time, which are non-farm payroll report. I don't know what you call it in your country, but it's basically the jobs report for one. I mean, you can look at that. Consumer price index would be another one that you might want to look at, or something. I mean, those are all things that I work with students on a very minimal basis on an advanced level, because it's not something that you really need to know in order to trade. Let's focus in on the few things that you need to know in order to learn how to trade. And then you can take those things and apply them, because they're easy to apply. Once you understand that they're simple, you get in there and you apply those things and you start developing your metrics. If your metrics suck, it means that you don't understand the rules correctly. Because the rules don't lie, the math doesn't lie. If you can't match the mathematical results that the metrics say that you should, then you're not understanding how to do something to provide that, to make that part of the metric flourish or be correct for you. And so you start slowly, but once you understand just those key things, what's the plumbing, what are the mechanics, how does this stuff work, and then how do I apply that in real-time trading in conditions with real money, trading a mini account, so it's $1 a pip, and when I can make on a weekly basis, let's say, enough pips at $1 a pip to buy a pizza, and I can do that for a couple of months in a row, I think you've got a good start. And then you dump in $40,000 to your account, or $100,000, or whatever you're going to do, and you go from there. But you got to be able to rinse and repeat. Most people can't do that. I mean, after I suffered that big loss, and then I had to trade for the year and come back and all that stuff, I put more money into my account so that I could trade, and I ended up 46% that following year. I was up 92% at one point, and I took a big trade because I was trading with large lot size at that point, and it just didn't work out. But when I started trading that year, I started trading slowly with one full lot, and I did that for a week or two just to make sure that the rules that I had come to were working. I was in sync with the market, and then I started trading 3 full lots. Then I jumped later that month, I was trading 3 to 6 lot positions. I went the following month, I was trading 6 to 8, and within about 4.5 months, 5 months, I had gone from trading 3 lot size positions to 25 lot size positions. So it doesn't take long once you get the momentum of your trading going and you have confidence in your ability to follow your trading plan to produce those consistent metrics. Now you can put put gas on that fire, and you can go fast. But in the beginning, you got to go slow. You know, in martial arts, the Chinese have a saying, slow makes fast and soft makes hard. So slow, you practice this very slowly, very, very slowly, so that someday you can go boom, like that. And slow makes fast, and then you go to the hard. Slow makes fast, fast makes hard. This becomes slow, and then it becomes hard. Trading is the same thing. Look at the experience of the nature around you to figure out what you need to do in order to maximize your ability in this terrific market that we have before it gets all regulated and stuff, and you're going to be forced to trade at low leverage and all kinds of rules and stuff. Get in there now while you have a chance and check it out. If you lose your money, okay, you gave it a try, but you gave it a try in the best market that you can have an edge in. Go to futures. Go to stock indices. Trade stocks if you want. But if you learn how to trade the currency markets, you'll be able to trade any other market. I have so many people that I talk to that trade stocks, and now they're trying to come in and trade the currency markets, and they're getting killed because the two markets, they're not. What you're doing in the stock market has absolutely nothing to do with how you would trade in the currency markets. I'm just here to tell you that. I've been looking at the currency markets since 2007. I've been looking at all the financial markets since the mid 1970s. I'm 74 years old. I've been looking at this shit for a long time. So if you're going to do the currency markets, bear in mind that they are non-intuitive and that slow will make fast. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.